Global financial markets are trading with a moderate optimism. This enables the ruble to trade under comfortable conditions, which were shaped on Friday. Risk aversion still comes from turbulence in the oil market, which remains under strong pressure on early Monday. Just Brent crude futures lost 5% in the early trade and later eased the pace of decline. In midday, WTI futures nearly touched $24 a barrel. Futures on June WTI delivery are also trading in the red, having snapped a 4-day winning streak. WTI dropped to a greater extent as North American grade slumped almost 14% in the first half of the day. Now, WTI is trading at $14.49 a barrel. This tailspin is again triggered by investors' worries about the lack of spare capacities in oil inventories. According to Bloomberg, crude stocks have been filled 65% at present. Stocks are added with 50 million barrels per week. Thus, all available stocks could be jam-packed with oil by late June. Another factor to weigh on the oil prices is the information that India is going to extend lockdown measures until May 15. By the end of the week, April 13, June futures on Brent contracts are due to expire, so negative market sentiment in the oil market is set to continue ahead of this date. Analysts do not rule out the same scenario as last week when WTI May contracts slipped into negative values. Meanwhile, market participants still neglect the new OPEC Plus pact. Besides, oil prices cannot find support from verbal interventions by oil exporting countries. The main culprit nowadays is a sharp contraction of demand for energy. Revival of business activity in the global economy is sure to boost demand for oil. Brent crude is likely to rebound to $30 a barrel by the year end. The Russian ruble opened today with a fragile optimism. The Russian currency is gaining ground alongside other emerging market currencies and assets. Besides, the ruble is supported by forex interventions by the Bank of Russia and the tax fill-in period, which is coming to an end in Russia. These factors are enough to prop up the ruble amid falling oil prices. On the other hand, the expiration of Brent June futures could weaken the ruble in the second half of the trading week. At the end of the last week, the ruble asserted strength against the US dollar. On Friday, the Bank of Russia trimmed the key interest rate by 50 basis points, dropping the hint about a further rate cut by 100 basis points. Such developments are likely to attract foreign investors, so investments in Russian securities could be a reason for the ruble's recovery this year to 70 versus the US dollar. Policy meetings of the US Fed and the ECB are on investors' radars this week. The central banks are not expected to come with surprise decisions because they launched massive stimulus programs in March to prop up the economy and financial system. Markets are keeping close tabs on corporate earnings reports. That's all for now. We wish you profitable deals. See you on our channel in a couple of hours.